Well, I think there's more relative weakness ahead, and it's really important on this rotation to talk about what weakness actually means, and it's relative. Because if you think about it, the technology index is still up 0.5% year to date, but it's up 49% over the last year. The NASDAQ's up 2%-ish year to date, but it's up 54% over the last 52 weeks. So the interesting thing about this rotation is it's unlike any rotation I've seen in the past. Normal rotations are a boom and a bust. This one is a boom and a plateau. So I don't think you need to run away from the big stocks that led us last year, particularly if you have big capital gains in them. Maybe they'll plateau and let their earnings consolidate into those huge prices that they developed last year, which would be really healthy and really exciting for a nice change instead of just having something collapse. So I think money can flow in to what didn't work last year, what's working this year. Money can flow in, but it doesn't need to be at the total expense, at the absolute expense of what worked last year.
But is there an argument to be made, Jenny, that if yields continue to rise here, that technology is a sector that won't be able to really outperform in this type of environment?
I think so. But the key being outperform, right? So let's say we're looking at, and this is where technology gets a little bifurcated too. So let's say we look at FANG, at the big guys, Facebook, Amazon, Apple. A lot of them are trading at kind of reasonable multiples, call it between 30 and 60 times. They can grow into those multiples. But let's say you're an individual investor and you made multiple hundreds of % last year. You may not want to realize those capital gains. You don't have to sell those to do well. Now, the other part of technology, the DocuSigns, Pelotons, Zooms, I think there's risk, like real risk in those, DoorDash, Airbnb, because to me, those market capitalizations cannot be justified. And maybe you do want to just suck it up and realize your capital gains in those because there is loss ahead, an actual loss ahead in that part of technology.
Yeah, I think there were there's a lot of surprise after Airbnb earnings actually came in higher than expected following that stellar debut on Wall Street. But where do you stand on a name like Tesla, Jenny? One of the big losers on the NASDAQ last week. Do you think that was a stock that just run up too fast? Or did it have to do with the big drop in Bitcoin that we saw last week? We know Tesla now has Bitcoin on its balance sheet.
What ran Tesla up last year was so, I don't know what to call it, like smoke and mirrors, or so fictional. Tesla ran up because of enthusiasm in an unhealthy way. There's no way to justify that market capitalization, and I don't even want to say valuation because it's just something ephemeral that it's trading at. So Tesla had a big move up in August because the shares split. Like, that added zero economic value. Tesla got chased up in no small part last year because of the ESG trade. I think that's a little bit ridiculous. You can make an argument. You can pretend that, oh, Tesla's an energy company now. Come on. You can say EVs are the way to go, but there's also huge competition there. And also last year was a big year where people just bought stories, because last year what happened was the dollars and cents and the numbers that we all rely on as investors to make decisions, those went out the window. They disappeared for a while, and they were replaced by stories. What's coming in this year is the numbers are coming back into play. You can rely on revenues expectations. You can rely on earnings expectations. So no, I don't think Tesla's Tesla's valuation at $900 a share, which is where it almost was, or here around 700. I don't think that's sustainable in that case. I think there's reasonable, if not significant, downside in the Tesla share price.
Oh, the Tesla up about 3% here in pre-market, so attempting to rebound. It's the first day of March, Jenny. What's the top trade here? Where do you see opportunity in this month?
I think the opportunity continues to be in 2020's have-nots. And so you can look at that as, I don't want to say value, right? But you can look at it as energy, financials, dividend stocks, reopening stocks, the things that didn't work last year and are still trading at huge discounts. So, for example, there's a company in our growth portfolio called Fiserv. Fiserv does a lot of software and technology for big banks, trades at 21 times earnings. Nobody knows the name. It wasn't one of the big story stocks of last year. Meanwhile, earnings growth for this year is going to be 23%. Next year, it should be 18%. There's opportunities in companies like that. And don't forget, like, there are about 10 stocks in the S&P 500 with an average multiple of 33 times. There are 490 with an average multiple of about 18 times. There are a lot of companies out there with really cheap valuations that really got ignored last year, and there's still a lot of potential.
On the topic of inflation, I mean, is that going to be something that this market sort of just continues to fight against in the month of March?
I think that's going to be a theme not just for March, but probably for the rest of the year and maybe going forward. And I think inflation is going to be a real push and pull. So you've got the Fed saying, like, inflation, there's no inflation. We're not even thinking about inflation. But the market's telling us differently. You see oil trading at 61. Last year it was at 47. You see copper at a 10-year high. You see housing prices that were up 11% in December. And then there's anecdotal stuff from clients. Like, this is interesting. I have a client who manufactures RVs, and they had to actually increase prices, which was devastating. They didn't want to do this to their salespeople or their clients, but every single supplier of those RVs have passed on price increases to the manufacturer. So you see it in the macro data and you see it in the micro data. And so there's definitely inflation out there, but then there's other areas of the economy where there's no inflation. I think it's just going to be a push and a pull, but I don't think it's going to be run away. I think it's going to be real, but not run away off the charts, derailing the market inflation.
Shepard Smith here. Thanks for watching CNBC on YouTube.